Okay, update on the U.S. equity markets here. SPX, QQQ, and IWM, the small caps. It is July 2nd, so we have a new monthly candle for July. Also, a new quarterly candle because it's Q3. And also a new 6-month candle because it's now the second half of the year. Of course, we only have 1 day of price action within those new candles, so not a whole lot going on there. But that's going to be a lot of really important information, especially in this tumultuous time we find ourselves in. So let's jump into it. SPX is first. We'll go through the daily chart first. We'll orient ourselves as to where we are in the cycle. So I will zoom in here. So Friday was day 34. We did make a new high above the previous day's high after making lows. So we topped out on, or I should say, we made a swing high on day 31, which was actually a bearish outside day. So we made a slight higher high, then came down and made a low below, the low from this day, right? I'm talking about, this is June 28th. And then we just had a lot of follow through. And then the next day we consolidated, and then we had more follow through, but then we had a rally, right? And then that rally kind of continued on Friday, where we made a slight high above the high from Thursday. So definitely an interesting picture here. Could be setting us up for some short-term upside. That was day 34 of the daily cycle. The swing low, the most recent swing low is right above 3707. So I really do suspect we're going to, at the very least, test that level. We'll see if that test is successful. If it holds, I suspect it doesn't. If it may hold the first time, but I suspect it doesn't for long because we have some unfinished business, and we'll look at some of the higher time frames. But the high for this cycle was actually day 14. So we're just, and it's already a failed cycle because we went below the low of the previous cycle, which was here on day 54. And that was all the way back in May. So all that to say, we should be getting a daily cycle low soon here, but I think the weekly picture is much clearer, and so we'll look at that. So last week was week 18, and you can see we finished the week, that Friday rally created this lower wick here. This is the multi-time frame analysis I continue to talk about. And so think about what that means for next week. So last week was week 18. So when we, the week of, the July 4th holiday, that'll be week 19. So really late in the weekly cycle. The previous weekly cycle ended on week 20. The one before that, week 31. Before that, 24, 27, 26. So you can see they tend to be in the sort of 25-ish, day, like 25-ish week range. Sometimes they're really long, like this one that was 31 weeks. And sometimes they're really short, like this one that was around 20. But that tells me we probably have another 5 to 7 weeks of downside if we get, let's say, a 25-week cycle. Here, if you're going to be optimistic and we say we get a 20-week cycle, that would be a low on the week of July 18th. But thinking more tactically, we're going to open as an inside week, right? We're going to open somewhere around here. You can see where my mouse cursor is because that's where we closed here, right? Unless we get some kind of crazy opening, like, if somehow we opened above 39.45, that seems incredibly unlikely that we would gap up 100 points. But this lower wick creates a situation we're going to be inside at best case scenario. And what we're going to watch for is a break below 37.38, which is the low from last week. That gives you sort of your we got to get outside of this range from there. And so my expectation is that we bounce around a little bit more in here, and then we spill over to complete the weekly cycle. And I think this is the same pattern for all the other indices, so I'm not going to go into those in too much detail, but that's kind of the idea here, right? Maybe we get like a 20 to 23 week cycle, and so we get our low in like August or something like that. And if you look at the monthly chart, more important, we are in the middle of a 3-year cycle, right? And that 3-year cycle so far has had its high on month 22. And a 3-year cycle is 36 months. Easy math, right? 12 months times 3. And so if that month 22 high, which was January for the S&P, is our high for the 3-year cycle, think about that. That means we spent 22 months going up, and we'll spend approximately 14 months going down. This is month 28 that just started, July. We have 1 day of price action, and it was green, so it's green so far, but it's obviously super early. And so you imagine if we don't get a low until month 36, which would be around March 2023, that's a lot of time to decline. Now, that's not going to happen in a straight line. There will be lower highs in the process. That's how this works. I mean, if anything, this is a lower high, right? Like if I zoom in, right, we made a low here, right, down here, and then we bounced up, made a high, but it was a low, but this high was lower than this high, right? So that's a lower high on the monthly chart, which is telling you we're in a downtrend on the highest of time frames, really, or one of the highest time frames, I should say. And then we made a low here, this low lower than that low. Well, let's say this is our low here. So we're probably in the process of making another lower high, right? So we're going to get a little rally, and then it'll peter out and resolve in a lower low. And if you kind of take a look at the much longer term charts, I'll take off the sort of annotations. So we look at the 6-month chart, you kind of see that same picture where we are, it's green right now because, again, we have that 1 day of price action that was green, but we look like we're going to fall off the edge. And the low there is, just to be clear, 36.37, thereabouts, And so I suspect we get to the 3,200 area. I've been saying that for a little while. How fast we get there is a good question, but, breaking that low at 36.37 is your sort of first warning sign. 3,500 looks like it might be a bounce zone. But on this longer time frame, you can see we've wiped out. This is a 6-month chart, so each candle is 6 months of price action, so half a year. You can see this is the big COVID candle from that first half of 2020, and then we had a rocket launch out. So we made a new high. Once we made a new high above this candle here, so that was 33.93.50. That was a reversal on the 6-month time frame, which is a much higher time frame than even a monthly chart, right? So that was a huge signal for you. Then we got big follow through, and then more follow through. Like, this was an amazing run, right? 6 months, 6 months, 6 months. Now we got wham. That was the first 6 months of 2022. Hello. Took out all of the gains from here and pretty much all the gains from here. And now I suspect we're going to get more follow through, maybe take out, what would that mean if we took out those gains as well? I mean, doesn't that look like just, right, it's going to add all that stuff back. I actually will, I know what I'll do here. I'll look at the other version of it. Right. So like that definitely to my eye looks like, right, wow. So okay, that would be at actually 30.95, right? So 3,100 kind of area. That makes sense. Like if you look at the formation of the chart, you can imagine we come down here and then we kind of resume the run, right? Like I'm not saying we're going to come down here and then just keep ratcheting our way lower. Like we're not going to zero, but we've had a really nice run. Like this is just post-COVID even. I mean, if you kind of think about this as a little bit of a blip, I mean, look at all this. Like this is just a nice run. This was your global financial crisis, pretty rough. That was your dot-com bust. So I'm not saying we're going to get one of these or even one of these, but we're probably going to get some follow-through for this second half of the year. Like if you think about how this candle might develop. And so if we turn over to QQQ, I'll actually just keep it on this same time frame. That could be helpful, actually. So that is a very much a similar picture, except in the case of QQQ, we've completely wiped out the previous 6-month period, whereas S&P was just about there, and we're definitely threatening that. So that would be, so in the 245 area. Yeah, makes sense, like structurally. So we'll kind of just look at the count for QQQ more closely as well. So we'll go at the daily chart. So also day 34 for Qs. For the Qs, it did not make a bearish outside bar on day 31, and the high was actually day 30. And that's an important detail. That is a sign of weakness from the Qs, right? The S&P at least was able to get enough buyers to get up there and then got rejected. The Qs couldn't even scrounge up enough buyers to get up there and get rejected. It like barely made like a little lower high and then just collapsed. And also important, the S&P made that slight higher high, like above the Thursday's high. The Qs have not. These are important details you want to pay attention to in terms of understanding relative strength. And one of the things that's lagging within QQQ, and like you should avoid like the plague, is SMH, the semiconductors. And I'll review that if we have time. And so this is the chart. This is the weekly chart for the Qs, and it was actually week 15 for the Qs. So it's actually not as late in its cycle as the S&P, but still pretty deep into the cycle. I suspect they'll bottom around the same time. Given how much downside there's been, you imagine there's probably going to be a catalyst that'll work to help them both bottom around the same time. And for the Qs, important to note, it did make a lower low below last week's low. I forgot to mention this, so I'll just kind of double back for S&P real quick. Notice it did not make a low like last week. We didn't make that low below, so it would have been 37.15. I suspect we'll finish the job next week, right? Like we'll just get that downside follow through, right? Like in the same way that this was just consolidation and then we got follow through. The same way that like this was you get a move like that, right? Like that just barely breaks the low, and then next week you come in and kind of finish the job. I suspect that's what we'll get. At the same time, it looks like we're trying to set up for a little rally, so maybe a little rally into the first couple of days, and then wham, a rejection for the end of the week to close us out. But that's important to note that the Qs did already make that new low, so again, just a sign of their weakness. So when we get that next leg for sure going down, that's the thing that you want to short, you want to be more aggressive against, because that's the thing that's showing the relative weakness. And on the monthly chart, same picture as the S&P, we're looking to make that low. We're in business below 269 for the Qs. And the 6-month chart, we did look at that sort of briefly. And I'll look at SMH really quickly. That's the thing that's one of the things, the components that's really dragging down the Qs. I mean, look at the difference there. Look at the difference on that weekly chart. I mean, this is just a monster of a bearish candle. It's just like, I mean, that's just an enormous amount of selling pressure. And so SMH is officially below 200 now. This thing was well above 300. Looked like it was going to push 350, no problem, 6 months ago. Very interesting. And this is a very similar count. I haven't updated this to the Qs in terms of, I think it's probably on week 15. And so we still have quite a bit of downside, and it's kind of already showing its weakness. And on the monthly level, wow, this is a perfect illustration. Do you see this? It's already made a low below the June low. I mean, it's only been one day. I mean, it's already sort of showing its face, right? Like, it's already made that low below last month's low, which is that 200 level, like falling. So, perfect if you're aggressive and inclined to do that, this would be a perfect short candidate on any sort of bear market rallies if we are getting a little bit of a sustained bounce. And finally, IWM, same count, day 34, did make a slight high, just like the S&P. So not as weak as the Qs, and also had that bearish outside bar on day 31. So it did muster up the buying pressure to at least get up there. And on the weekly level, same thing as the S&P, did not make that new low. In fact, we got that upper wick, got that little bit of a rally on Friday, sort of tried to save the day. That was week 18. The previous cycle for this one, though, ended on week 31, so that one was pretty long. So there is rationale for this one to be a relatively short one. But still, this tends to be, have cycles in the 25, sometimes even 30 week range. So you're certainly not early, but you're not necessarily quite at the end of the cycle as what you would expect. So possibly we could definitely see a retest of this high, for instance, and breaking through that would definitely be interesting. That would cause me to reevaluate the situation, right? Like that would that would potentially put us in a situation, right? So like this high is, for instance, 178, which is right. So this high is the high from this week. So if we were able to break above this high, that would give us a new weekly high, make this a weekly swing low. And that would take a pretty violent upside move to make that happen. So that would be pretty convincing as well. So scenario picture looks incredibly bearish, yet one big green candle could come in and save the day, and we know what that would look like if that's something that comes out. So definitely, I think more money to be made on the short side, sort of in the coming weeks, next month or two. But be careful. Make sure that you're positioned. Make sure that you're getting in at optimal points, because we're going to have these sort of violent sort of bear market squeezes.